welcome to the channel. Hope you guys are having a fantastic day. Today we're going to do the analysis on GameStop. This is going to be more like a swing trade strategy that I'm going for because the stock basically the stock is not like it's been consolidating lately. It's not really moving in high volatility. So we're going to talk about what the strategy I'm looking at and how we're going to go about that. So before we begin on the technical analysis, the news that came out today is that the hedge fund that got wrecked because of the GameStop and the stock was $19. There was a lot of shorting going on for the stock, right? The hedge fund that was part of that short got wrecked because there's a lot of Reddit, Wall Street bets. Everybody started jumping into the stock, and they had to cover their shorts, and the end became a short squeeze. Right? They squeezed it so much that it almost rose to like $400-500 at that time. Right? So a lot of people made a lot of money. So that hedge fund is pretty much booked now. They're done, and they're out of the business. Okay, so they're gonna come out. Maybe they're gonna come out with a different name brand or whatever the case is. But that brand itself, as we know, it is done. However, that didn't really cause the stock to go up or down or anything like that. The stock is still down on a day. It's about 3% down. And I'm going to look at more like a long-term play on the stock and see where this is, and do we, is this worth investing, or are we already, wait for the stock to fall further and see where we go with that. So the way I have the support and resistance set up is I have monthly. When I do the support and resistance, I usually go for month, week to day. And usually for monthlies, I use green lines just to give me an indication where the stock could fall. And then I have the stock going about $81 or so if it start dipping further down. And right now the stock is about $95 on a month. Let's talk about daily, okay? So daily, I'm using red lines here. And we're going to talk about different indicators on the red line. So we have EMA, exponential moving average. We have MACD, moving average conversions and diversions. And we have RSI, how much the strength in the market is to purchase the stock. And also on an average, how much ATR stock, right? How much of a dollar move the stock makes in a day, right? So let's look at it. Let me take a look in last 90 days because the stock was very volatile, and to see how much an average the stock, right? So let's talk about the price move on a day, right? The stock moves about $13 or so in a day. So that's actually a good amount, right? $13. So if you're looking at a day, for example, if you start from here, let's say we take a look and sort of certify this is an average, so it might not be exact. So 101, it went down and still moving down to 89. So yeah, it's about $12-13 in a day it can move, So if you're doing options, for example, just understand your stop losses and your where you want to stop on your resistance. So it's a $13 to $10 play in a day. So, that's a very good information to know if you're doing options. So on and so forth. Again, this is not a financial advice. This is just going to be for educational purposes only and what I'm trying to do for my own investment. So as far as a long term, I started the March 29th is where I started looking. I have a Fibonacci retracement from March 29th to May 12th. And on a Fibonacci retracement is sitting at about 23%. Look, if it goes up, for example, it crosses 38%, which is $124, then it's going to go above 157, and so on and so forth. But right now, the stock is consolidating. EMA is the exponential moving averages, which is, is way down, and the stock is bouncing off of it. So I from the RSI perspective, RSI is also 40, which is, on a downshift. However, I do see the stock there's still going to be a little bit more selling on the stock, but once this MACD crosses over on a day chart, and of course I'm going to keep a tab on it. If I'll be making more videos about that. But if the MACD crosses over, for example, you can see a shift in the price, and if it does shift, it shifts in $13 or to $10 a day, right? So you could potentially gain that momentum if it started trending up, for example, and we could look at a daily chart at that point and see if it's going to hit that. It's going to cross the resistance that I have here for 23.6%, which is around 106. If it crosses that, it's heading to $112, $111 or so. If it crosses that, the next resistance is going to be 124 and then 135, right? It has to go through all these prices, but if it started going down, it could potentially go down to $83 and then $79. And after that, it's going to be sort of a free fall to like 60, 65, 55, and so on and so forth, right? But look, this is, to me, right now the stock is on a downward shift. It had a good momentum, in around March or so. It had a very smart money came in at that point. When you see a big spike like these, for example, on a daily chart, this is not retail investors. GameStop is a lot of retail investors as well. But when you spike like this and you have 16 million shares sold, usually there's also institutional banks coming in, and then, and they're also shorting the stock as well. So that's another thing that you need to worry about. And the good thing about meme stocks is that when you invest in them and you happen to capture a day where the stock is pumping up, usually it runs into the sort of a short squeeze a lot, because it's above 20% short interest, which means that, it's very prone to a short squeeze, which is a good thing for people who are doing the trends, right? Like if you're, for example, catching the momentum and you see the stock going up and you logged in the morning and you see the stock is rising and these levels, for example, and you know that, all right, if it crosses this level, $101, it could potentially go to 106, and it's moving in $13 to $10 range, right? So if it crosses up, it could potentially go up, and then from there you can actually dive into the stock. And if you're, for example, other than Robinhood, or you're doing options, for example, you could always do calls option. That also is a strategy that people do if they don't want to invest in the stock. They could get the options and make money like that as well. But again, this is not a financial advice. This is just various ways one can make the money. If you're on a different platform other than Robinhood, you could always short the stock, if you see the stock is going down. So there's always a way to make money if the stock is going up or down. Like, for example, the stock fell from here to here. There's a lot of people that made dollar on this. You want to be on the both side. You want to be on the winning teams. Either it's going down or up, right? Going down, if you're on a Robinhood, option is the way to go for put options. And if it's going up, if you want to buy the stock and be on a safer side, because options do expire worthless sometimes, and you potentially could lose all your investment. Buying a stock is a little bit of better opportunity in terms of saving your money if it does go down, but you don't lose the money. Eventually, if it revives, you could always come back and get your profit out of it and come out of the position. But in options, once it's expired, you lose your money. The risk to reward ratio on that one is really high if you don't know what you're doing. But in stocks, generally, it's a little less forgiving on if you don't know much about it, and you could just follow the trend. So to me, the stock is coming down right now. But again, it has a good run. It came down. If it bounces back up, as I said, right, there's a possibility now it's consolidating, and there's a possibility that it break out. If it does break out, you're looking at about 125 to 130. But if it goes down, you're looking at about $60 to $65. But right now, very crucial. You got to watch the stock for the next few days and see how it behaves. And stay on the daily chart for that one. Just to get you an idea that if it's coming with a green candle, or is it going up, or if there's a gap, for example. That gap would be if somebody came into the dark pool, like institutional banks, and they bought the stock, which is not visible to the market, to avoid any spikes in the price. That could, if you see any gaps, for example, you already know the stock is moving up. For example, you see a gap right here. So that's also something to watch out for. But yeah, that's my quick video for today. I just want to put it out there for you guys that GameStop, it's consolidating right now, and there are different levels that you can potentially can achieve. And of course, it could go down and up, but again, if it's going up, you already know what the levels are. And yeah, my quick video for today. I hope you guys liked it. If you did, please do give it a thumbs up. If you're not subscribed, do consider subscribing. My objective here is to get you guys all the information we can. And of course, none of this is financial advice. This is just me putting information out there. Whoever want to, understand and maybe do their own analysis based on that. So